Namaskar, hello and a very warm welcome viewers. You're watching the special presentation of Sansad TV, Bills and Insight, your one-stop destination for views, news and analysis of proposed legislations of India that have far-reaching implications and impact your life. I'm your host Kriti Mishra, and today the spotlight is on the Factoring Regulation Amendment Act. President Ramnath Kovind has given his assent to the Factoring Regulation Amendment Bill, which was passed by Parliament during the last monsoon session. The new law is expected to improve the availability of credit to micro, small and medium enterprises, as more non-banking financial companies will now be eligible to offer factoring services to MSMEs. Let's take a look at the highlights of the amendment. It amends the Factoring Regulation Act of 2011 to widen the scope of entities which can engage in factoring business. It empowers Reserve Bank of India to make regulations for granting registration certificates to a factor, filing of transaction details with the central registry and all other matters. It removes the 30-day time period for the factors to register the details of every transaction entered by them. But what is factoring? Well, in industry parlance, factoring is defined as a financial transaction in which a business sells its accounts receivable to a third party for debt financing. So let's understand this with an example. A business may have sold goods worth 1 lakh to a third party and may expect the outstanding amount to be paid within 6 months. Its capital, however, will be stuck in the business until it receives cash from the third party. So the business may decide to sell the receivable worth 1 lakh to a buyer at a discounted price of 90,000. The buyer of the receivable, in this case, can make a profit of 10,000 if he manages to collect the entire receivable amount of 1 lakh from the third party. So why were these amendments needed and what are the changes now? Let's take a look at this comparative analysis. The Act defines receivables as the monetary sum which is the right of a person under a contract. The bill amends the definition of receivables to mean any money owed by a debtor to the assigner for toll or for the use of any facility or services. The Act defines assignment to mean transfer of undivided interest of any assigner in any receivable due from the debtor in favor of the factor. The bill amends the definition to add that such a transfer can be in whole or in part. Under the Act, no company can engage in factoring business without registering with the Reserve Bank of India. For a non-banking financial company to engage in a factoring business, its financial assets in the factoring business and income from the factoring business should be both more than 50% of the gross assets or the net income, or more than the threshold as notified by the RBI. The bill removes this threshold for NBFCs to engage in factoring business. And for deeper understanding of these amendments, I'm joined by an illustrious panel of guests. Joining us, Mr. UK Sinha, former chairman of SEBI. The Reserve Bank of India had set up an 8-member expert committee under the leadership of Mr. Sinha to review the framework of the MSME sector in 2019. Several suggestions of his committee have been incorporated in the amended Act. He's joining us through virtual platform from the national capital. And in the studio, we have with us Mr. Ashok Saigal, co-chairman, CII, MSME Council. Welcome to Sansad TV, both of you, and thank you so much for joining us. And also in the studio, we have with us a very vibrant audience. Some of them are lawyers, some of them are students of business, accounts and economics. I welcome all of you on Sansad Television. And before we commence our discussion, let's take a look at how our parliamentarians debated the bill.
I support this bill because there is no scope to give the statement I laid up. I may permitted to give submit the statement, Miller.
Honorable Prime Minister has come forward to help this industry with bringing lot of schemes. Will appreciate that, especially in that sector. Now, the purpose of the Act was to address the problems of delay in payment and liquidity faced by all enterprises, including micro, small and medium industries.
Now, if they are able to access NBFCs who can perform as factoring third parties as well, And where in the place of 7, now this act will bring in 9,000. You can imagine the number of MSMEs which can directly benefit because of this and directly have the benefit of having their bills, receivables, being given to the third party and getting more liquidity for easy operation.
Mr. Sinha, let me begin the program with you. While moving the bill in the Lok Sabha for passing, Finance Minister Namrata had said that the government has accepted the recommendations of the Standing Committee which scrutinized the bill. The Standing Committee on Finance had suggested the best global practices to be adopted to bring the domestic factoring companies at par with the global peers and make credit finance more accessible to MSMEs. Several suggestions of your committee were also incorporated. Take us through the key suggestions, sir.
One of the important points to note is that when an MSME is dealing with a large industry, they are at a financial disadvantage. If there is a delay in payment from the side of the large industry, they cannot sue them, they cannot file any cases against them, and they have to wait endlessly for the payments to come. There is a mechanism that arbitration can take place or cases can be filed, but it is not always to the advantage of the MSME, and they don't do it. So what the factoring does is to help the MSME to get the cash from a factoring agent at a discount. So they suffer a small discount, but the advantage is that instead of waiting for 5 to 6 months or even more, they can get the cash in their hands and they can resume their business, they can start other transactions. So factoring, the act in the past had some lacuna, it had some difficulties. The factoring companies had some restrictions. Now with the growth in the fintech industry, a lot of data can be shared seamlessly.
Absolutely. So factoring is a very important part of the entire MSME ecosystem. Mr. Saigal, coming to you now. With the amended act, the scope of credit has been expanded. MSMEs can now take credit from more than 9,000 NBFCs. Certainly a huge breather for the MSME sector because it was hit the hardest by the COVID-19 pandemic.
Yes, there are 2 points in this, Kriti. First is the amount of credit which has become available would increase. The other is the number of players, and especially when you look at MSMEs, they tend to operate in a limited geographical area. Now, having not just 9 NBFCs operating, but having 9,500 or something like that, what happens is that there is an NBFC which is close to you, close to the MSME, who can deal with him, who knows him and is therefore comfortable in extending credit to him. So this geographical outreach to the smaller towns and the tier 3 cities and the hopefully going forward in the rural areas, this is what will make a major positive impact on the growth of MSMEs, which, if I might take another 30 seconds, why is there so much importance given to MSMEs? First, people talk they're the base of the pyramid or the backbone of industry. That's all right. But realize that they are the largest employer in the country. Absolutely. They have a big contribution to GDP. And very importantly, the growth rate of the MSME sector is faster than that of the larger enterprises. So at a national level, we can have faster growth through MSMEs. We can generate more employment through MSMEs. So anything that can be done to support MSMEs is very welcome. And this is a big step forward. Thanks to Mr. Sinha and his recommendations to RBI.
So it is a big step forward for the MSME sector. But Mr. Sinha, NBFCs will be permitted to undertake factoring business and participate on trade receivables discounting system. Help us understand the concept of trade, sir.
Let me take you to a generic term called cash flow lending. Normally, an MSME gets or used to get loan only by way of providing some collateral. So they had to provide some house or some other assets against which they could take loans. Here the concept is that if there is a visibility of a cash flow to your MSME, Based on that, lending can take place and things can be provided. Finance can be provided. Here, the important thing is, and while we talked about factoring, let me take you to the larger development in the country which is taking place right now, and it is at a pilot stage. And the committee had recommended this, which is that when account aggregators are brought in, and any data about the company can be accessed by a potential lender based on consent, of course. There is an experiment going on right now called GEM Sahai, GEM Sahai. What happens here is that the borrower files all his details online, and then the information goes to maybe 5, 6, or 8 lenders who are already registered with James High, and they can decide based on the data supplied whether they are willing to consider this amount. And the interesting part is that these lenders can then bid for the rate at which they are going to give the loan to this particular company. The borrower has the freedom to decide which particular lender he is going to choose. So this is, in concept, this is completely revolutionary. It is not happening fully. It is at a trial stage right now. And RBI has blessed it. RBI has fully supported it. And my guess is that this cash flow based lending with the help of account aggregators can be a game changer so far as the financing needs of the MSMEs are concerned. So this is going to happen. It is already in the trial stage.
Mr. Saigal, do you agree with Mr. Sinha that it would be a game changer, given the fact that factoring was only 2.6% of the total credit system for the MSMEs?
I tend to agree with him. We have to see how it gets implemented on the ground. You mentioned at the beginning this thing about trades, where one can put up one's invoice. And I think the key thing in all this factoring is that the person who purchases the receivables of the seller is doing the purchasing not on the credit rating of the seller, who being an MSME may or not be very strong, but on the financial strength of the borrower, of the buyer. So now here you're talking about a buyer who's a large company, maybe an L&T or a Hindustan Lever or something like that. Their credit rating, their financials are well known, and therefore the risk to somebody who's purchasing receivables from a well-run public company is much less than he would if he were giving that credit to the small-scale industry whom he doesn't know. So to that extent, this entire concept is very, very welcome. I'd also like to touch on the collateral part, which Mr. Sinha referred to. You see, in terms of collateral, most banks would want you to give a fixed asset as an immobile asset as collateral. For instance, he mentioned you mortgage your house. So it means that if a small-scale industry wants to expand his business through bank financing, he must first go and buy some real estate, mortgage that to the bank, and then borrow against it. I find this very strange. Why should he not invest directly in his own business? In any case, the bank is only going to lend him a percentage, let's say 75% of the value of the mortgage property. So he's not concentrating on expanding his business, he's concentrating on expanding his real estate so that he can offer his collateral for the purpose of borrowing. Now, Mr. Sinha also referred to the data which is available, and there's a scheme which was announced 3 years ago by the Honorable Prime Minister called a 59-minute scheme, which was interesting because he remarked that I didn't say 1 hour because 1 hour can be so many hours, but 59 minutes means it is under 1 hour. Now, what happens there is that the borrower has to share his GST returns and his income tax returns with the potential lender. With that data available, an algorithm which is used by most of the lenders who are on this platform is that they can very quickly assess what is the capability of that business in terms of the volume it's doing, its profitability, and so on. So the ability to take a decision on whether to make that investment or not is based on solid facts and not a general feel-good factor about a particular individual you may know or a feeling you may have about an industry. So this kind of data-driven thing which has come in, and this factoring was going to be part of that. that the factoring will be based on publicly available data about the buyer rather than the seller whose data may not be available. So I think that will go a long way in making this successful.
But sir, one of the issues flagged by the experts that even large creditors find it very hard to make successful recoveries. Under the current system, Mr. Sinha, how do we provide a very strong oversight mechanism for the factoring ecosystem provided for the MSMEs?
As it was being mentioned just now, the risk for the lender is not on the MSME, but it is on the large company, large corporate who has received the goods and services. And they are normally quite large. Their rating is better. It's very easy to get information about them. So getting the data, getting the information about the large company, which is the recipient of the goods and services, should not be a problem. A lender may be afraid of taking a risk with the MSME, but here the risk is on the receiver of goods and services. That is the most critical point in this whole ecosystem. And also, let me tell you about, take the example of a GST. If somebody has filed a GST return and it says that he has supplied something and he has paid the tax, he has also said that he has received the input credit from the earlier supplier, and that is part of the system. So this data is quite robust and quite reliable. So I don't understand, unless there is a very serious attempt to defraud, I'm not sure how this system will fail. One has to be careful.
So there's a very strong and a robust regulatory regime in place. Now let's take some questions from our audience. Please go ahead, introduce yourself and speak your mind.
What will be the impact of this amendment overall the MSME sector, and will this help to grow the size of MSME sector and thus solve the middle problem?
So the impact of this amendment on the entire sector?
Right, that's a very basic question. You see, since you're all from the business or economics or finance field, there are two things. One is the amount of money and turnover, the other is the velocity of turnover, right? Now, if your money is stuck somewhere, it stops you from growing. If you can invest somewhere or sell something, you get your money back. Let's take an example of a shopkeeper. You'll go out and buy more goods and stock your shelves, and more customers will come. So you may earn a small percentage of profit on a large turnover and make a lot of money. Now, think of the reverse. Person makes a good sale, but he doesn't get paid for it. He can't restock his shop. Nobody will come there and buy from him again. So you may make a big fat profit, but then at the end of it, your own earnings reduce, the amount of service you can do, it all stops. So the velocity of turnover, which any business, especially those which are having good growth potential and are growing, they need this kind of support the most. So they're the companies who can benefit most, that they will not be constrained in their growth due to lack of liquidity and funds to churn out more output. So that's the importance of this.
All right, I have time for two more questions. Let's take them together.
Sir, I'm Anushka Jha from GYMS, and I would like to ask you, could you please provide us an overview of the concept of receivables and assigners?
Next question.
How we can strengthen the MSME credit market?
It's very simple. You've sold something. Now, the person who's buying from you does not have the ability to pay you right now. You decide to extend them credit. All right, take the example of going for purchasing a motor vehicle or a motorbike or something like that. You don't have all the money up front. A bank steps in between and says, okay, I will fund it. You give me so much. So the concept is that if I have sold something as an MSME to a large corporate, then I have a due from that corporate which will come in due course of time. I need the money now. So what do? I, as the assigner, will assign it to a factor. The factor are of two types, which is not, I think, so much publicized in India right now. The two types of factoring. One is with recourse, the other is without recourse. Forget the difference. The difference is only that when you go without recourse, it means that you have shared your responsibility to the financier. If he gets paid or doesn't get paid, it's up to him. If it is with recourse, if he doesn't get paid, he can come back to you and say, the buyer is not buying for XYZ reason, so now I'm going to recover it from you, whatever money I'd given you. But the point is that you have sold something and somebody says, I have confidence that this money will come. You need it right now, I'll give it to you. But I will charge you the interest up front.
Yes.
Okay, so if you expect the payment to come after 6 months, you will pay more. If it is risky that the person may or may not pay, the rate of discounting will be higher, but you will get the money right now. And I think as MSMEs would always face this problem, that they are willing to always pay a little more. It's the timeliness of the money which is more important, because that shuts down the business entirely, rather than the cost of the money. So they're more flexible on the cost of the money and less flexible on getting a timely payment.
All right, sir. So that's a very important sentence, that timeliness is more important even than the cost of the business.
Cost of capital.
Cost of capital. Right, sir. On that note, time for closing comments from both my guests. Mr. Sinha, coming to you first.
You know, since you have people who are students of economics and finance in the studio, they all must be knowing the time value of money. 100 rupees coming after 6 months is not worth 50 rupees today if the rate of interest is above a certain level. So my colleague is right in saying that the velocity of the money, velocity of the transaction is very important. What this experiment will do is that people will get their money in time, maybe within a few days, and then they can start their own business. My own sense is, and we had studied some other countries also, that if this factoring system succeeds, if this cash flow-based system succeeds, we will have a game-changing attitude towards the MSME sector. And more people will then join the MSME sector and become entrepreneurs.
More people will become entrepreneurs, Mr. Saigal?
Definitely. You'll open the gate for them to be ready to take the jump. And if they drop their business plan and see that, yes, the money is going to come in faster, they'll definitely feel encouraged, rather than feeling that if I start this business, supply to so-and-so company, whether I'll get paid, when will I get paid, those worries go away. So, of course, they'll feel happier and quicker to jump into that business. Thank you.
So the amendments will liberalize the restrictive provisions in the Act and at the same time ensure that a strong regulatory or oversight mechanism is put in place through the RBI. On that note, thank you so much for joining us, Mr. Sinha and Mr. Saigal. Next week, we'll return with incisive analysis of another important bill. Till then, take care and stay tuned to Sansad TV. Namaskar.